In this video, we're talking about bank stocks options income, how to use the banking sector for realistic options income, collecting around $100 a week, using cash secured puts and covered calls. Now, I'm gonna break down low volatility bank stocks, how the too big to fail crisis back in 2008 affected the way people see this sector. And I'm gonna go through two tickers in particular that viewers asked me to go through and why I don't like them for options income. I'm gonna show you in this video a safer, more liquid bank stock if you wanna use bank stocks to create ongoing income for yourself. Be sure to stay until the end. I've been trading for years, decades actually, and one of the biggest mistakes I see people make is just chasing high returns and not understanding the volatility or the liquidity of the tickers that they're trading. Especially when it comes to bank stocks, the implied volatility is super low. Here's what that means. Smaller premiums, and because of that, generally, you need a lot more capital to hit the kind of income that usually you're trying to hit. So in this video, we're gonna be honest and practical, and we're gonna talk about a more achievable target. I'm gonna show you how you can make like $100 a week on a super liquid, super safe bank stock, and how tickers like OZK and HBAN don't really fit into that equation. As always, this isn't investment advice. Make sure you do your own research. So let's start with the reality check first. Bank stocks tend to have super low volatility, much lower than the big high-tech names that I usually trade and that I usually talk about on this channel. So that means less premium and less return. But there's really nothing wrong with that per se. In fact, especially new traders might be attracted to bank stocks and the low volatility because it gives them a smoother ride. Now, before we jump right into the tickers, let's talk about the qualities I look for when I'm looking at an options trade. Typically, I'm looking for three main things. Number one, ideally you want to have frequent expirations like weekly. So the big companies will generally have expirations every Friday. And I like tickers that trade weekly because I want to create weekly income. Number two, you want to look for strong liquidity. That means narrow bid to ask spreads and good volume and good open interest. It means a lot of people are trading them. And then number three, I'm usually looking for the best ticker in that field. So if I'm looking at a bank stock, a well-known big bank. So let's talk about OZK because a viewer asked me to review that on this channel. Now, the first thing I notice when I look at the options chain for OZK is it doesn't offer weekly options. It also has pretty low open interest and volume. So there's not a lot of people trading it. Let's take a look at HBAN. And when I look at that ticker, it's kind of the same thing. Not weekly options, although the open interest is a bit higher, but still the volume is super low. So let me walk through a better bank stock if you want to trade the banking sector. I'm going to use Bank of America as an example because that's like one of the biggest banks there is, right? When you look at Bank of America, you see weekly expirations and you see super high open interest and volume, meaning very tight spreads when you're looking at contracts. Now let's walk through an example. I'm gonna look at the December 12th contract. Right now, Bank of America is trading at $53.95 per share. And I'm gonna look at the December 12th contract. When I sell a put, I generally choose a strike price that's kind of far away from where the stock is trading because ultimately, I don't really wanna buy the shares. I would prefer to sell a put, take an income, and not have to buy the shares. If I do have to buy it, it's okay. But if I had a preference, it would be to drive income off of just my cash. Now with bank stocks and Bank of America as well, the implied volatility is super low. So oftentimes when you go far away from where the stock is trading, you really don't get much money. So let's take a look at a $53 strike that expires on December 12th. That's trading right now at 29 bucks. So $29 gets dropped into your account right away. And what you're doing is this, you're committing to buy 100 shares of Bank of America, but only if the price drops below $29 before the contract expires on December 12th. If it doesn't go down, you don't buy the shares, and either way, you keep the cash. So now before I make a trade, I'm always gonna calculate the rate of return. I'm gonna divide $29 into 5,300 because 5,300 is the capital that I need to put up to make the trade if I'm not using margin. And that gives us a rate of return of about 0.5%. So here's how I look at rates of return. I want to annualize those figures out because I always want to compare an apple to an apple. So because this contract is December 12th and we'd be holding it for about 1 week, I'm going to multiply by 52 and that gives us an annualized rate of return of about 28.4%. Not bad, but it's definitely a lot lower than many of the tickers that I usually walk through on this channel. And the reason for that, once again, is because of the implied volatility being much lower. One comment I do want to make though about the banking sector in general is that the lesson that we saw from the 2008 financial crisis is that the government is not very quick to let a bank fail. So they can be a lot safer, meaning that if you trade Bank of America or if you're trading a different ticker in the banking sector, it's probably not going to go bankrupt. Of course, there's no guarantees and there's always going to be a risk in the stock market. And like I said, I'm not giving you recommendations. You have to do your own research. But it's certainly something to keep in mind. Now let's also look at a covered call for Bank of America while we're looking at that ticker. Because the great part about selling a put is if and when you have to buy those shares, you turn right around and sell a covered call against those shares. That's called the wheel. So for example, let's say I had right now 100 shares of Bank of America and I bought them for $53 and some cents. If I was to sell a $54 call that expires also in 1 week's time, well, that last traded at about 60 bucks. So in order for us to get a rate of return on that trade, we would divide $60 into 5,300 because that's the capital that we would have needed to initially buy those shares. And that gives us a rate of return of about 1.1%. And again, if we annualize that out, well, now that's giving us about a 58% annualized rate of return. Not bad. Now I want to take a moment and talk a little bit about margin as well. So margin is going to depend on the ticker that you're trading as well as the broker dealer that you're trading through. The easiest way that you want to check what the margin requirement is on a trade is you just want to analyze the trade. I'll show you how right here. So basically, you're going to right click and you're going to analyze the trade, and then you're going to see the required margin in this box here. So you'll see, for example, if I wanted to purchase 100 shares of Bank of America at the going price, which is $53.95 per share, instead of needing $5,395, I would only need about $1,600, far less. Now you want to be super careful if you're using margin, because what happens is this. If you only have, let's say, $1,600 and you have just enough to make the trade, if the stock starts to go down, your margin requirement is going to go down as well. However, your total account value is going to shrink faster than your margin requirement, meaning it's going to cause you to be undercapitalized, and that's what people call a margin call. That means you don't have enough capital to support the trade that you have, and then you'd have to liquidate a trade. So you don't want that to happen. If you're trading on margin, you really want to have some sort of application where you can stress test a position and input hypothetical drops in the price. For example, let's say this particular stock goes down 20%. Where does that put my margin requirement? Where does that put my account value? If you're not doing that, it's only a matter of time before you blow up your account. Believe me. Now, most broker-dealer platforms, believe it or not, don't really offer good technology in order to stress test positions. They often offer the ability to stress test one ticker at a time, but most people aren't trading just one ticker. Most people have a couple different stocks at least in their portfolio. This is why I'm creating technology where you can look at a portfolio as a whole and you can stress test all your underlyings at the same time and see where a margin call would occur. There are certain things that cause most traders to lose money, and being undercapitalized is one of the biggest reasons. So you want to be super careful if you're using margin. Anyway, I hope this video helps. Let me know in the comments. Do you like bank stocks? Do you like technology stocks? Do you like utilities? What kind of stocks do you like? What kind of video do you want to see me do next? I'm putting up a video every single day. I know it's a lofty goal, but for 1,000 days. I started this on July 8th. So I've been doing one video a day for about 5 months already. Now, don't forget to check out the live stream. Listen, guys, I've been doing a live stream now for a few weeks, but Monday I'm changing the platform. So I'm using a real live account with only $5,000 because a lot of you guys here on my channel have asked me, hey, give me some ticker ideas, show me how I can make money, but I don't have that much money to start with. So I'm gonna show you with a live account with only $5,000 to start. Trade with me. And not only are you gonna see me enter the trades, but listen carefully. I'm gonna go live every single time I make an adjustment to the portfolio. So you're gonna see exactly what I'm looking at. And if you want, you can copy exactly what I'm doing. But most importantly, you're gonna see the methodology in walking through all these trades. That way you can learn how to create income for yourself on a regular basis. Anyway, that's it. Happy Friday. I hope this helps, and thanks for watching.